value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, it's great to be back, and thank you to all your listeners for tuning in today.
Ted, what's going on with Canadian gold miners, especially the juniors?
Well, we've had a bit of volatility, as I'm sure most of your guests, most of your listeners know, and I'm sure some of your guests have noted as well. Now, I think we've got a couple things that have been going on here. As we wrote to our subscribers on Monday morning, we have seen a pickup in insider selling, including in the junior gold area, taking some money off the table after a very strong run. And in our last interview, Jim, I mentioned that I think that we were in the early innings. We had gone through the first inning of the junior mining bull market, and, we've progressed here. So I think, we're somewhere in the sort of middle innings, and this is where you can get, lulls, and sometimes the home team gets behind, and, we've had one or two rough days here in junior mining, but, I think that's all kind of par for the course in any junior mining market. And yes, some insiders have taken off some money off the table, and we do view that as a short-term sort of bearish sign, in terms of, the, momentum anyways in the junior market that's probably due for a little bit of consolidation. Now, I'm going to put a big caveat on that, in that it appears things in capital markets happen a lot quicker than they used to, with these cycles that used to take years to play out, and now it seems to be that you can have full cycles play out in a matter of months, weeks. Just with all the high frequency trading and algorithms and now AI type strategies involved with the market, that things happen a lot faster than they used to. So we don't know how long this consolidation will take place, but I do think it does indicate that we are entering sort of a middle phase of the junior bull market, which means I think you have to get even more selective, and this is my personal opinion, on which junior golds you're going to hold. So while we had a case where sort of all boats were lifted by a rising tide initially, so many of all the juniors were just left for dead for so long that they all were re-rated, just about all of them. So they were all given a valuation boost because all of a sudden people realized, that gold in the ground is worth a lot more, and it's probably going to be worth a lot more for a longer period of time. But now we've had that re-rating, so now it's okay. What's next for these properties, and what stage are they at in the mining life cycle? Are they at the exploration stage? Are they in that? Are they in that sort of critical period between having done their exploration for the most part, having done a study, a feasibility study or pre-feasibility study, and now they're waiting to get the financing? That's typically a lull for a stock. Are they ramping up their construction? So all of these things are matter. I think it made more, a lot now, and because you're going to have, I think you're going to see money moving around the sector quite a bit by people wanting that growth, because you're not getting that same lift on every stock. So a lot of stocks are going to start consolidating, and you're going to have investors that are, moving money from their consolidating stocks into ones that they want to see, perk up. So yeah, it's going to be a stock picker's market, and it's going to require a lot of skill. And of course, we look to the insiders to guide us for opportunities, particularly in those early exploration plays where you can get a lift, and also, coming out of that feasibility stage, where they're kind of waiting for partners to come together to do the funding for the construction of a potential mine. So those are all the types of scenarios that we keep an eye on for insider activity to tell us, what may be next. And of course, if there's some drilling results and we see a lot of insiders selling, we usually see that as a pretty good sign to take some profits along with the insiders.
Well, I've seen on our show Discovery Watch that sometimes even when you have positive results, the market doesn't always react the way you think it would or should. What's behind that sometimes? Is there more at play than just drill results?
Right, well, Discovery Watch is a great show for those who are following the junior mining industry, and we do have that on Canadian Insider, by the way. We do have that in our broadcast section, so people can listen to it there, and your interviews, Jim, with John Kaiser. And it's positioning, I think, for the most part in a lot of these names, and that's for the market in general right now, because you've got so much trend following just generally in the market that it's not hard for a popular theme to get overdone, and too many long positions on the long side of the boat, and it starts to tip. So this can happen in junior mining as well, particularly in some names that are thinly capitalized. So it's I think in a lot of cases it's sell the news. Some cases it may be not understanding what the implications are of the results, and John Kaiser's very astute at being able to understand what different drill holes mean. And he knows he's got a lot of experience in that area. We don't go into that. We can't go into that kind of analysis. That's not our forte. But there could be some misunderstandings as well. Although I think in a lot of cases it's just positioning and people taking profits after some news. But every case is different.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Ted Dixon. Ted, is there a lot of action or interesting action in the bond market?
Jim, the bond market is a really important area to keep your eye on right now. When we wrote our market report on Monday morning, we did indicate some concerns in the junior mining area, but the other area that we pointed to was the technology area being a bit overdone. And really what it boils down to is for months now, not years, investors have favored these, what we call bond proxy stocks that would do well when yields keep going lower and lower, because, for example, in technology, you're able to discount those future earnings, at a lower interest rate, which increases the value of the stock. Okay, that means because you don't have to penalize those future earnings as much when the interest rates are lower when you're doing a cash flow analysis of a stock. So that's been very good for the technology sector. However, we are all waiting. It's the multi-trillion-dollar question facing investors everywhere on planet Earth. are we near the end of the bond bull market? Because if we are, those interest rates are going to start going back up. So far, the bond bulls have been able to keep charging. Rates have been continuing to fall. The pandemic, exacerbated the whole move to lower rates. However, we saw signs last week and early this week of maybe some bullish exhaustion on that rate rally. It's too early to tell. No one rings a bell at the bottom of rates or of anything. Only time tells, but we did see rates last week try and make, new lows again, and they didn't. And now they've come soaring back ahead of what was a 10-year bond auction today. And that is interesting. It's interesting on a couple of fronts. One, because yields do not make new lows. But Jim, I am not a believer that you can really read much into these bond market signals anymore. And this is the ongoing debate between, I guess you'd say, the inflationists and the deflationists. The deflationists out there will say everything really sucks because just look at the bond market. It keeps rallying, and that's signaling to you things really are lousy out there. And they'll go as far as to say, and the bond market never lies. Unlike the equity market, which is, always flip-flopping around, it can never make up its mind, and the bond market has integrity. Well, I do not buy that. I do not believe there's any integrity in the bond market. I think the bond market is full of liars. And why is that? Because you've got the Fed manipulating rates. So every time I hear this, well, the bond market is telling you this, and the bond market is telling you that, I don't buy it. I buy it. What I buy is the Fed is telling you it wants to keep rates low. We know that. Yes, and they're trying very hard, and they've been very successful at doing that. And the question is, how low do they want rates to go? And so one theory that I have, which is only a theory, is that, when rates were really getting low last week, the central planners who now run the U.S. capital markets thought, oh, this is going to be very bad for this bond auction that we have coming up this week. Because we won't get enough buyers for the bonds, and again, I keep hearing this line from the bond permabulls out there that there's this huge demand for treasuries. Well, Jim, if that's the case, why every time when the Fed goes in to buy $1 of treasuries in the market, it gets $3 in offers for those bids that the Fed is putting out there? So I would say there is a concocted demand for treasuries. There is not a real demand for treasuries. So I think the central planners were getting a little worried that they may not have enough people showing up to the auction, and so they let the rates go higher. And they were successful at that. And, unfortunately for those who were, long technology stocks, and in our market report, we did write about the risks of being long technology stocks at this point, because we thought it was a very crowded trade. And of course, insiders are, they love this rally. They take money off the table almost daily in that sector. But, we just thought that it was overdone, and I think the Fed said, well, we'll I believe the central planners, came to the conclusion that they needed a little higher rates for this auction. So they let the bond market go, and now their bet will be, and I'm kind of putting my tinfoil hat on here, Jim. I don't usually do that, but you can. Anyone who wants to accuse me of having a tinfoil hat here, go ahead, because you're probably right. But now I think they're going to say, okay, we've had our auction, and it went off fairly well, and compared to expectations. So, now I think they're going to say, okay, that's enough. We don't need these rates to go up anymore. So, over the next few days, we'll watch and see. Do long-term bond rates in the U.S. settle down, or do they start to slip away and move to new highs? If they slip away to new highs, it has a lot of implications. Some of them could be bullish, and some of them, could be a bit more concerning. So it's too early to tell. We're not there yet. We don't even know if the rates are they may just head back down to that middle range that they've been stuck in for the last, few months. We will have to see. But I can tell you that we put out, a report today on Canadian Insider, Canadian Insider blog post that people can take a look. It's Ultra Money blog post, and it's called Subtle Bullish Signals from a Sell-Off. And on Tuesday, we noted what stocks actually went up. So you can go take a look at that blog, and they were economy-sensitive stocks. That leans us slightly to the economic bullish camp, that investors are starting to price in a recovery from this COVID-19 in that, and I think you take that in a number of ways, but at the very least, you could say the world is starting to figure out how to operate in a COVID-19 world, even if it doesn't go away right away. And I'm not one of these believers who there's going to be a vaccine by the end of the year and everything's going to be great and we're just going to be going back to the same old thing. I do not buy that. There are a lot of people in the market who buy that view. I do not buy that view, and time will tell whether that view is right or not. But I don't think it matters if we're right about this bullish take, because the economy is adjusting. It's slow, it's painful. There's going to be a lot of collateral damage along the way, but there's also opportunities for those companies that are able to capitalize on, the shifting trends as the economy adapts to the COVID-19 world that we're in.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ted Dixon. Ted, what do you like and what don't you like in the resource sector right now?
Well, as we mentioned at the beginning, I think one has to be very picky on what junior gold miners you're holding. And I personally, I've pared down a lot of my holdings. I'm trying to kind of narrow it down into some core holdings of stocks that have, held up relatively well or are actually led. We're ahead of the decline here that maybe sold off a few days before the venture market sold off yesterday and have stabilized faster. Those types of stocks. So I'm being more picky in terms of the junior gold that I hold, but we're getting a decent signal short term on the oil and gas sector. If you do start to get this visibility of how we're going to operate in a COVID-19 world, it will be on balance positive for the oil and gas industry. Does it mean they're going into a boom? Not necessarily, but does it mean maybe that still not all the good news has been priced in? Possibly. So we're a little constructive here on oil and gas going forward, and a little bit more constructive on some of the base metal miners. I wouldn't get too overly enthusiastic at this point in terms of the next few weeks. I think the fall there's going to be a lot of give and take in terms of economic data that could knock the whole market around, never mind just the junior miners and the resource sector. So we'll have to see. But, I think China has held up relatively well here throughout this whole episode of COVID-19 and the recovery. So and they're obviously a big driver for demand for commodities. And yes, I know there's a school of thought out there that China is, it's a ticking time bomb and la-di-da. But the fact of the matter is so far, they seem to be doing okay. And those are the cards we are dealt with, and those are the cards we trade with. So a little bit of a tilt towards the industrial real economy side, and I'm being a little bit more picky on the precious metals. But the general thesis is still there, I think, for us, that eventually there's going to have to be an inflation to solve these issues. The only other alternative, and I heard heard a great podcast the other day. It wasn't on our website; it was on someone else's. But with Lacey Hunt, who's been one of these perma bulls on bonds, but he's been right for like 4 decades. So it's really worth listening to him because he's got such an in-depth knowledge on things, and he's such a veteran. And I always like to listen to other people who challenge my views. But his take is basically that people will take the austerity to clean things up, and I'm not so sure I agree that the electorate in any Western democracy is prepared to do that. And that's, I guess, where we differ with the bond bulls. I just don't think that that the voters in Western democracies are going to say, "Oh, sure, let's take the pain and let's go raise our taxes and let's cut our services and let's clean up our fiscal mess." I don't think that's going to be the path of least resistance here going forward. I think the path of least resistance is money printing, more inflation, see what we can get away with, push the market to the limits. And look, in the U.S., Jim, let's face it, okay? We have U.S., which is a global, Western leader in terms of economic trends. It's evolved to a centrally planned capital market where you've got Main Street, which is, still more or less subject to a free market. And, it's a kind of a messy situation. And you telling me in that situation you're going to have the U.S. Congress say, now we have to raise your taxes and now we got to cut back spending? I don't think so. I think they're centrally planning their capital markets for a reason, and that is they're going to really see how much they can get away with in monetizing their debt via inflation. And every other major economy in the Western world will tag along with that approach.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.